Hi, I'm Jamie West, a local real estate broker, and the number one question I get is how's the market? So I put together monthly, local, and national real estate updates to keep you informed on what's going on today. There's so much negative news out there right now that I wanted to make sure the consumers out there know the truth and really what's going on. And I agree here with Sam that after so long, it kind of just wears on you. So here are a couple of examples. This one here is from MarketWatch. Cash out refis are back. Will homes become ATMs again? So that's saying that we're going back to 2008 and people are pulling money out of their houses and being irrational and pulling it out for all sorts of crazy things. Consumer debt hits $4 trillion. Americans are diving deeper into the red. So this headline definitely gets your attention, and I'll give you the real scoop here in a minute. And another one here from Bloomberg. The housing bear who called the 2018 slowdown says the worst is yet to come. Stack says he sees the risk of the worst year for the housing since the last crash. And another one, will the U.S. fall into the recession by the end of 2020? Half of the business economists think so. So again, there's all sorts of negative news out there, and the same thing was occurring to some degree back in 2008. So I posted this, I thought it's very true. I have a lot of people asking me, Jamie, what do you think's going on with the market? What do you think we should do? A lot of people just kind of on the sidelines because they're just not sure what to think with all these headlines. So this quote here from Ivy Zellman, that we don't just have to know the local market. I do want to keep an eye on the national market as well. And then just to kind of let everybody know monthly what's going on with both so that you have a full understanding. So going back to this article here, the cash out mortgages refis are back. Have homes become ATM? They are back, there's no question about that. So the fourth quarter numbers aren't in yet, but we're looking at 81%. And the worst was going back to 2006 where it was 89%. So people are saying that people are going back to pulling equity out of the house again, which is correct. But what I wanted to point out that if you look at the Freddie Mac report, the amount of equity being pulled out is nowhere near as what it was in 2006. Through 3 quarters, we're at $38 billion. Don't get me wrong, that's still a lot of money. But look at 2006, $321 billion. By the end of the year, we'll probably be at $52 billion. So we're at about a sixth of what they were then. And before the market really heated up back then, in 2001, 2, 3, and 4, there wasn't as much equity to pull out. The numbers are still higher than they are today. So I just wanted to let you see the actual numbers and where we're at. Americans are diving deeper into the red. And yes, though the title is correct, consumer debt hits $4 trillion, that's just an outright lie. We need to take a look not at the total amount of debt because of course it's going to go up and they don't adjust for inflation as the population gets bigger. People take on more debt, buy a new car, a bigger house. What they need to do in that same report is what they need to tell us is the amount of household debt service ratio for mortgage as a percentage of disposable personal income. How much is the debt compared to how much money you make? That's really the most important thing, not the total amount, but what each family is paying in regards to how much money they're making. Although $4 trillion is at the all-time high, if you look, 4.24% of their total disposable income is what they're paying, and that's a 40-year low. It's lower today than it was in 1980, and I'm only saying that because before they didn't even record those numbers. So when you look at the headlines, they're thinking, oh my gosh, we're in a big mess, but if you go through the report and find out that we're at the lowest ratio per disposable personal income that we've been at, you think that we're actually doing okay. And back to this one. The housing bear who called this 2018 slowdown says the worst is yet to come. I mean, I don't even know where he's getting his information from. And here I share this quote from Logan with Financial Truth. He says, I don't expect big declines in demand or massive monthly supply spikes like we saw in 2006 through 8 to create any meaningful price declines in any markets. We have to be mindful that this housing cycle never had a boom in total home sales. The epic sales decline that some housing bears are praying for will not happen in 2019. And they're not the only ones saying that. Here you'll see the total home sales. The Mortgage Bankers Association, Freddie Mac, and Fannie Mae were asked how many home sales they feel we're going to do this year versus last year. Well, you see Fannie Mae says, we're going to do about the same. Freddie Mac thinks maybe a little bit better. But the Mortgage Bankers Association, if you look at them, they think we're going to do phenomenally. One other question is, what about price? So when people look at the pricing, they like to look at the graph going back all the way to 2000 through the end of last year. And if you look at it, it's almost like a roller coaster. It went up during the housing boom, came back down, now it's going back up again. So if you look at this, you might say, based on this, if it is a roller coaster, we're even higher than we were in 2006. So is that roller coaster going to come back sliding down again? So I want to show you this graph in a little bit of a different light. Let's assume we took the real price that it was in 2000 and we just added a 3.6% historic level of appreciation. So every year since 2000, we add 3.6%. And then forget about what actually happened. Let's just assume that we took a normal level of appreciation every year. So here's the chart reflecting that, and if you follow that through, you can see the prices today are exactly So a quote from Zillow states, overall the housing market still favors sellers, but is slowing, trending towards historical norms. So I show the chart here of the Case-Shiller year-over-year price changes, and you can see that there has been no dramatic spike up in pricing, and you can see that we're just kind of slowly going down very gradually for a soft landing. So that's what's taking place now, and that is what is projected to continue. The experts at the Home Price Expectation Survey say that they think that it's going to drop from 4.2% this year to end at 3.8%, and then kind of go down slightly with the pendulum effect and come up to 3.3% for 2022, which would be right in line with our historic average of 3.3% appreciation on an annual. So here's a quote from Ralph McLaughlin. If there are a lot of homes on the market and suddenly no one wants to buy them, then you get into a downward spiral of price competition. Right now, however, there's the opposite situation. There isn't an overabundance of home on the market. We determine the market conditions for a buyer and seller market based on the inventory levels and absorption rate. Currently, Tampa's at 2.6 months of inventory, which is still a seller's market, and national, they had mentioned about 8 months inventory. So by no means are we way over those months of inventory in any kind of trouble or a buyer's market at this point. We hear a quote from Ivy Zelman. Our latest broker survey, stable mortgage rates and expanding inventory give us confidence that growth in the second half of 2019 will be material enough to offset year-over-year declines that are likely to persist into the second quarter of the year. So that being said, seeing the numbers coming in for the first couple of months of the year might be negative still based on the slowdown we had from last fall. But they feel the market's going to gain momentum going into the second quarter, and those numbers are going to be very strong by the end of the year. And that's why Fannie Mae, Freddie Mac, and the Mortgage Brokers Association think that by the end of the year that everything's going to be fine with the numbers. So here's an article of USA Today trying to predict when that next recession is coming. So a recession is actually coming. We all know that. It's just a matter of when. So there was a survey done with 4 different groups, and we put it into the survey here so you can kind of see how many think it's going to be 19, 20, 21, or after 2021. And then on the next slide, what we did is we kind of broke that down, and we took all the percentages and averaged it and made a simpler graph to look at. So you can see now about 22% of the 4 surveys think that by the end of this year we're going to be in recession, 46 for 2020 and 18, and then 14 for 2021. So yeah, there's definitely a recession coming. But that does not equal housing crisis. And so I just wanted to point that out. And by definition, it is just a slowdown in the economy for 2 consecutive quarters. So we put this into a graph for you. As you know, the last recession was caused by the prices dropping dramatically. But if we look at the 4 recessions prior to that, only one of them pricing on houses declined. The other 3 were up, and 2 of them were higher than the national historic averages of 3.6%. So going back to the chart that I showed earlier, this was the survey done by Pulsenomics that took 100 of the economists, market analysts, and real estate experts and asked them what they thought was going to happen to home prices during the recession. So you can see none of them feel that we're going to have a decline or go negative. We're just going to kind of soften during that time and then start to come back up towards national historic levels. I share with you a quote from Ralph McLaughlin. He is the CoreLogic's deputy chief economist. He says, "There's no reason to panic right now, even if we may be headed towards a recession. We're seeing a cooling of the housing market, but nothing that indicates a crash." So again, he says we're coming in for a soft landing and not a crash. And another quote from Morgan Housel, a well-renowned financial analyst. He says, "An interesting thing is that the widespread assumption that the next recession has to be as bad as 2008. Natural to think that way, but statistically highly unlikely. Could be over before you realize it began." So there's one of the most well-renowned, most sought-after speakers in the financial sector saying this. This landing is going to be a soft landing, and everybody's pointing towards it's not going to be anything like 2008. Here I share the resources from the information I provided. Now I'm going to go over the current market trends and what's been going on. This one just shows the average days on market, and you can see the color coding and the different states, so you kind of know where we fall in there. The existing home sales, this is going to be the year-over-year reports. You can see the new home sales, so that would just be the new construction. They break it down outside of the other ones. And new home sales, so you can see out of that the price points that are really picking up. Here are the pending home sales, and then based on region. Distress sales, you can see they're still very low. And the prices. So this is the forecast here. You can see where we fall is 6.8% here in Florida. And inventory level